Okay, so hi, Mr. Burrow. Welcome to the UBC Vancouver Housing Market Club interview. My name is Barton, and I'm a fourth year UBC solder student and also the president of the Housing Market Club. And you're obviously a very busy man, so it is truly my honor to have you here today. So welcome.
Thank you. And I'm glad that people like yourself and students are interested in real estate and hopefully will take on the next role as I get close to retirement, that there's young guys like you that are going to get in and keep the business going.
Thank you, thank you. So yeah, so today I think we're gonna have a really fun interview. And I was there at the Vancouver Housing Market Summit. It was hosted like last month, and you were one of the presenter. And I really interested in what you said before about real estate investment. And for those who don't know you, I only know a little bit about yourself. You're the co-founder and CEO of Triview Capital, where you focus on like investment strategy for investors. Um, and also you work in the city of Alberta, right? So why don't we start at the beginning? What does your company do? Uh, and what's the essence about your business? Can you give us a little bit information about your company?
Sure. So Triview Capital was founded in 2012. We are what we call an exempt market dealer. And there's three securities licenses to sell securities in Canada. One is called IROC, which is your traditional stockbrokers, or when you think of the banks. The next group is a mutual fund under the MFDA, and they sell mutual funds only. And the exempt market is what we do, and we only invest in private companies or private placements of public companies.
Mhm.
So it's a unique license. It's for specializing in private alternative investments. And since 2012, our company's deployed about $400 million into private equity. And over the last couple of years, we mainly do real estate. We did other things, but really focus on real estate. And I like real estate for two reasons. One, it's easy to understand. And two, it's easy to explain. If you ever rented or owned, you kind of get the concept. Whether you buy a home, buy a rental property, buy a building, buy an industrial site, the numbers are the same. There's a real simple thesis. I buy a piece of property under two reasons to how I'm going to pay for it. A, I can pay the mortgage myself, or two, I get someone to pay my mortgage by paying rent.
Mhm.
So from our side, what we saw in the last couple of years was the stock market. It was one of the largest, longest bull runs in history. And we started thinking in 2018, early 2019, we think we were looking for a product that was being more hard asset, was recession resistant as far as real estate, and something that had a low correlation to the markets and a natural hedge to inflation. So through that process, we created our own trust called TVC Trust, Private Real Estate Trust. And it focused on real estate, and it focused on recession-resistant categories like multifamily, student housing, car wash, self-storage. And we also wanted to do some things about related businesses. Like, for example, maybe a company that does elevator service. Well, how is that linked with real estate? Well, I can own a building, whether it's filled or not. If I don't make sure those elevators are safe, the city will shut me down. So it's an ancillary business that will always make money in good times, bad times. We're also looking at recent investment in prop tech. The way the world's changing, people are no longer writing checks. People get more comfortable investing online, and people are more comfortable making payments online. So it's a natural thing as we grow to this next level, especially in COVID, where you're self-isolated. People won't accept checks. You can't, tough to get to a bank and see a teller. So you're encouraging platforms. And what we're seeing, especially in prop tech, is the initial thing is to go online, pay online. Okay, well, right now I'm in COVID. I haven't had a job for a little bit, or my pay's been decreased. What do I do next? Well, I'm going to go after my credit cards or my line of credit. And then when that's all done, then what do you do? And then unfortunately for some, they'll go to payday loans and really get themselves into trouble. So our goal is to find the ways that through microloans, through one of the investments we made, that add actually people that, especially tenants, up to 6 months interest-free loans, so they can actually have a little time to pay the rent, get back on their feet again, and move forward. And again, it's a related business to what we do because most of our clients we invest in is in real estate in multifamily, which is apartments for tenants and landlords.
Yeah, very, very interesting. And to begin with, you mentioned about like real estate, it's easy, which kind of contradicts to most of our students think like real estate is actually, it's quite daunting, right? It's a long-term commitment. It's a huge purchase. It's basically a lifetime of mortgage payments. And you just made it sound like a little bit easier. What do you think about that?
Well, look, it's it's easy in the sense if you know what you're doing. And again, always your first time is always nervous because you don't know, do I want to commit myself to paying this mortgage or be responsible for it, whether have someone else pay it for me through rent.
Yeah.
But real estate, it's pretty simple in the sense of getting the numbers to ensure I'm not overpaying. Where people get in trouble with real estate is either over leverage and the value of the property goes down. All of a sudden now the mortgage is worth more than the property. And then it's the point, that's why people give their keys to the bank. The other issue is that you're right. Real estate, to make money in real estate, is a 4-letter word. It's called time. It takes time. And one day in 20 years or 25 years, when you buy real estate, you look up, God, you go, gosh, I've got all this money in real estate. I've got all the mortgages paid for because I had other people paying it for me. And there you go. There's my pension. I've built a business. And, you know, for me, my first place I bought, I was 26 years old.
Uh-huh.
I bought my first townhome. And then from there, I bought condos as investments because I never really, honestly, I've never really put money in the stock market. I generally one of those guys that lost money in the stock market. But what I've always done personally well was in real estate. So for me, I just gone from naturally buying my own place, buying some condos, and then thinking, okay, well, maybe I can go even bigger. And that's why we created TVC Trust, so we can create a larger pool of money. And when you have money, let me tell you, the golden rule still exists. He who has the gold or she has the gold, that's the golden rule, makes the rules. So as you get more money, you get to be able to get better deals and demand better results for your investment.
I see. Yes. Thank you. So let's talk a little bit about how this pandemic kind of affect the real estate market here. So obviously now the economy, all the data is showing us that the real estate should not be performing that well. In fact, the CMXC even called for like a 9 to 18% drop in real estate price in Vancouver. So far, all these like predictions have not been proven true yet. So I'm just wondering, is it because like real estate is actually that like resistant in recession, and is it because of all this anxiety that people are just holding, and the supply has gone down and just drive up the price? What's your take on this, like real estate price rising?
Well, again, it's a long-term play, right? What is happening today may not happen in 10 years. So when you look at real estate, think of it this way. Do you think Vancouver will have more people in 10 years or less?
More people.
Well, that means more people means more housing. So I would say long-term that if you're going in a place where population is going to grow, owning real estate for people to live in is not a bad idea. Now, what's happening with COVID, and again, this is when we create our fund. Now, we didn't have a crystal ball saying COVID's going to happen, but we want to know if the market did correct itself, where would you be safer? And especially in places like Vancouver, where people are more safer, when you look at these investments, is not necessarily condos. You certainly wouldn't want to own a hotel right now, and you probably don't want to own retail or office right now. Now, if you're a big institutional and you have institutional clients, well, they're going to pay the rent. But you're worrying about, again, all the ancillary, all the coffee shops that are relying on these buildings to be full. In Calgary here, before COVID, we had a 30% vacancy. I would say right now in Calgary, it's probably 67% vacant. So when you have 67% of these office towers vacant, what's the local shop owner who has a coffee shop or a restaurant or a dry cleaner, what are they going to do? Their business is going to fail. And that means those people can't pay rent. So when I looked at our investments portfolio, we wanted investments that actually seem to be okay and recession resistant, but actually some are actually showing to be COVID. And one of those is the rental side, because what we know with this outbreak is that self-isolation is mandatory.
Yeah.
You can work from home, but you can't live in your office. So people are going to make sure that they're going to have a roof over their head, where they own or they rent. That's a priority. So we see that market right now, that there's going to be some challenges with some landlords deferring some fees, maybe reducing some costs to keep people there. And you want to help the good tenants that, you know what, I'm in a tough spot here. I lost my job. I can't pay. I'm a good person. I have good credit. I just need help. And that's where the art of a good landlord has to make that decision. Now, you talked to a landlord a year ago in Vancouver, and they'd say, get them out, kick them out.
Yeah.
We got tons of people. Well, now it's maybe a little different. So I think this pandemic has shown that things change. I think apartments are showing themselves to be more resilient than most real estate asset classes. I think things like self-storage will continue to grow because people may have to downsize. I think things like car wash, I'm not going to be buying a new car, but you know what, for $10, $12 a week, if I can wash my car, keep it clean, that might be a value. Student housing, we're looking at short-term, there's a blip here.
Yeah.
But I think January, eventually students will have to go back to school, or you have a lot of international students who are trapped here in Canada. And when you have UBC shutting down their dorms or SFU shutting down their dorms, what are people going to do? So we think there's a little blip in student housing, but I think long-term will be fine. But I certainly right now have no hotel, and we're staying away from office and retail because we think those markets are going to have some mid to long-term issues before they turn around again.
Yeah, obviously, like office and businesses, they're more like rethinking about having employees work at home. Like Facebook and Google, I think they kind of let employees to work till the end of 2021, especially tech companies who are more willing to switch online. I think it's gonna make a huge impact into our office sector, right? Yeah, so in terms of like student housing, obviously I was at UBC once just to look around. It was like a ghost town. No one was there. And the economies around the campus is kind of just dying down along it. And I can really truly understand why you and your company tried to like stay away from it, as well as the hotels that no one's traveling obviously in, which is kind of bad for the country's economy. Yeah. So as you talk about downsizing too, and maybe you've heard like anecdotally like people are trying to stay away from cities, to stay away from multifamilies because they feel like they don't want to share a lift with some strangers, right? Because they want to stay away from each other. More people are moving away from city centers to suburban areas to have, at least when they're having a quarantine, they can stay in a garden, have a few walks. Do you think like in the short to medium term, multifamily might not do as well as single families?
Well, it comes down to, again, Barton, it's a good question. It's about ability to pay and what you can afford.
Yeah.
I would love to have a nice house in Shaughnessy, but you know what? I don't have 7 million. So
Me either.
I have $500 a month, and I need to find another friend or two to help me get a condo. So I think the issue there is you have to look at affordability and what you can afford. So I do believe that, I think, especially people your age, look, when I was your age, I came out of school and the first thing I did is I rented.
Yeah.
When I buy a house, I had to rent and save my money. So I think you're going to see a lot of students are looking at real estate, again, because it is a long term. And yes, maybe real estate goes down in value, maybe it's overpriced in a point in time.
Yeah.
But I think what we're seeing right now with the next workforce like yourselves is, do they want to be tied to a home? Because do they want to be tied to a community? Or do they want the ability to, get up and go? I was told you go to school, you get a job, you get a house, you get married, you get a family, and then that was just it. But I think now a lot of people are saying, well, wait a minute, what do I want to do with my life? I don't want people to tell me how to live my life. I think your generation have been a tremendous opportunity to learn because of the internet and access. I mean, When someone said to me, Craig, when was the date of the U.S. independence? Well, I either had to know it or I had to go to the library and find a book. You can look on your phone in 2 seconds, tell you exact date. So in many ways, you don't need a memory because everything you have is instant. So with that information comes power. And I think you're seeing a lot of it in the stock market right now. What's selling? It's the tech sector. And who's buying? Well, people actually understand the tech sector. Do you think a 55, 65-year-old person knows the tech sector? Do you think they discovered Shopify? No, it's the youth because you're more in tune to it. And what you're seeing right now with the baby boomers are transitioning the wealth and really the power of the consumer market to millennials. And then, of course, the Gen Ys are coming right after them. So there's a big change in the market. I think people are watch what their parents have gone through. You spend a lifetime paying down a mortgage, paying high property tax and all the tax that goes with it, and found out they made nothing. Whereas they could have gone to live in Vancouver, go live in Hong Kong, go live in San Francisco, and move around. So I think you're going to see that people aren't going to be so tied to their community. I think you're also going to see that people have the affordability issue. And I'm going to make, unfortunately, I see some people making less money and the costs continue to increase. So in those things, I'm going to be forced to live in multifamily. Now, you're right. The issue is, are people want to live in a 60, 70-story building? Or do they want to live in a 4 or 5-story building where at least you can walk up the stairs, or the elevators for a small ride, not for an elevator that's going to go up for 60 stories. So I think you've got some merits there, Barton, about worrying about the size of multifamily. Also, what this has shown, if I'm going to work from home, maybe that 500 square foot condo that I got, 1 bedroom, I need 2 bedroom. So is there going to be now move towards I need a 700-800 square foot unit because I need the space for working. So these are things that we're going to figure out. We'll get through this, but you're right. At this point, I can't tell you what the exact size you're going to need in the next 5 years. I look at we make our investments in 3 to 5 year windows, and we think multifamily in the next 3 to 5 years is a good bet.
Yeah. So obviously the theme here is to think long term, right? Not to make like abrupt decisions regarding to real estate. And just a segue to the one of the topics that you talk about during the summit is like not to get into the get rich quick scheme, right? And it's really helpful to always to step back and take a look and see what is actually going on with the data around, what's the atmosphere in the city. And so it's like to think about like that. Presumably if people have money sitting around, they might try to make some moves right now, right? Because the mortgage rate is low and people are looking to rent in a more comfortable place. So, but there's also a lot of risk that, because real estate market is always kind of like, how should I put this? It lags behind the economy because the real estate cycle is always slower. You think like I feel like the drop is coming soon, and people might lose a lot of money trying to get the low mortgage, and then the market's gonna drop. Do you think this is like a good example, like why we should say no to the get rich quick scheme, just like, but we have to think more long term?
Well, another good question. So Barton, when you look at real estate, if I'm buying my principal residence,
Yeah.
I'm buying a quality of life and what I believe I can afford. So whether my home goes up and down in price, it doesn't really matter because it's a place where I call home. It's not an investment, it's my home.
Okay.
And if I'm looking at investing in real estate, you got to be very careful about, would you be out running around trying to put deposits down on condos right now? And you could do that a few years ago because the condos are going up. You could just, buy it and flip it and make money.
Yeah.
It's like the stock market right now. Like the stock market, I believe, is totally overvalued.
Yeah.
But it keeps going up. And I would tell you that there'd be one day it's going to drop 20-30%, but it might be 5 years from now, it might be tomorrow. So from my point is, I believe you invest in what you know. And real estate is something where I can get comparables pretty easily. If a condo unit in Vancouver is going for $1,500 a square foot, and everyone else around is $1,500 a square foot, why would I pay 2,500 square foot?
Mm-hmm.
I know my numbers. Whereas Shopify, I don't know. Why is it worth? I don't know. Why is it worth more than RBC? But
Yeah.
as the market says it is. But
Yeah.
that could change quickly. So from my point is, when I was 26, my first mortgage was 8.75,
No.
and my father in the 80s was 17%. So I thought eight
Uh-huh.
and three quarters is pretty darn good. Well, today I can get a mortgage for 2%.
Yeah.
And I look at 8.75, that'd be outrageous. Who'd pay that? Well, but it's all relative. So I think right now, if you are looking at real estate, interest rates have to go up.
Mm-hmm.
Inflation is going to go up. So do I think interest rates will be higher in 5 years? I do, but I could also be very wrong. But when we're making our investments with a 2% interest, especially locked in, I know my costs. So from our point, I think now's a really good time to take advantage of low interest rates for real estate.
Mm-hmm.
But you just got to be careful about over leveraging yourself. And if you are, leaving room, I don't really see the market dropping 30%, but could the market drop 10? Yeah, it could. But if you got 30% equity in, you can withstand that. It's when you have 90% debt and all of a sudden you drop 10%, that's when you get yourself in trouble. And from an investment point of view, I could put money in a deal and lose all my money because I
Mm-hmm.
over leverage. So there's got to be a bit of a discipline there. What I like about real estate versus the stock market, there's less rush to buy high and sell low because I just can't get out of my building tomorrow. Whereas I can get out of stock in seconds. So that's the other thing when you're looking at investing. If you're going to invest and trade, be a trader,
Mm-hmm.
trade stock. It's liquid. Real estate is not a thing you get in and out. Long-term, wealthy. Short-term, you got to put in the effort. Whereas, the instant success of buying the right stock is not the same as real estate.
Yeah. So yeah, it's feel like because it's less liquid, the movement is slower. It feels like it's a little bit safer at when it's like at the price range. And as like now the stock market is kind of like a roller coaster instead, but it's still always still going up, which is makes a fall a lot more crazier and more scarier for the riders who's trying to go on for the ride. But yeah, that's a very
Well, look at
um
when this started in March, right? I asked you a
yeah,
question. Look what the stock market was, and look where it is today. Is our economy better today than it was in March? So
yeah,
there's a total disconnect. And the
yeah,
disconnect is two things. One, it's governments putting trillions of dollars of printing cash
yeah.
and putting into the market. That's why gold's gone up so fast in the last
Oh
several
yeah.
months. Realizing, wait a minute, you can't, there's a great article by the Bank of America that says the Fed can't print gold. So um, that's why gold's going up. And that's why, gold may drop below 2, but they
Yeah.
think gold will go to $3,000 US an ounce. And I think the way governments keep printing money here, that's a pretty darn good bet.
Yeah, it's just like government stimulus have been constantly pumping trillions of dollars into the economy. It just kind of inflated all these like illusions that we're seeing right now. And I'm just really curious like what happened after, for example, when the CERB is ending, it's gonna end soon, right? People are gonna have to go back to work, right? But I'm not sure if they can get back their original job because most employers are not hiring back. To be quite frankly, they don't have the customers. Restaurants are not running at full capacity anymore. They don't need that much like waiters, which is quite concerning about in 2021. I just really hope that you have like a crystal ball. You can tell us like what we can do next year. But unfortunately, seems like it's gonna be a really interesting year in terms of the real estate market as well as the job market, which these two are like really closely connected. So yeah, thank you very much for your insights. Um, with our interview, it's almost coming to an end. It was really fun chatting with you today. I learned a lot, and hopefully our students can get some insights from you too. Do you have any tips last minute tip for our students who are trying to figure out their life in investing in general? What are maybe some advice that you would tell your 20-year-old self? Can you give us something?
Drink less, um, stay in school, and only risk the money you can afford to lose. So that's the biggest thing is, and be patient. Wealth, people who are truly wealthy, it took years for them to get there. There's no overnight quick success, right? In case, go to Vegas and play the tables. But I would say to you that don't get downhearted. It takes time. You make your investments, you keep paying things down, and then one day you wake up and you go, oh, wow, I got a whole lot of money. But it takes time, and that's what I just tell people: be patient, work hard, be a good person, and when you're looking for jobs, people that comes through. Like, I see a lot of young people yourself that will look for jobs that you're smart, you're intelligent, you're respectful, and you want to work hard. Those are key ingredients for someone to say, you know what, I got a job for you. And I think good people don't have anything to worry about. Those who think they can kind of skate by, they're going to find right now when the market's a little tougher, it gets tougher. So stay sharp, stay smart, and have integrity, and you'll be fine.
Thank you, thank you. So how can we learn more about your company? Is there a website that I can put at the show notes or something like that?
Yeah, so on our website, trivewcapital.com,
Yeah.
we have we do education seminars. So let me just make sure I'm giving you the right thing. Let me just pull it up on my computer 1 sec here. I do think it's all there. Yeah, so if you look at Join Us, it's on our website. It's called Join Us for our 8-week webinar series called 8 Weeks of Summer.
Okay.
And if you go into that front page there, you'll go down and it will show you the our investment series. So we right now are in week 7. So there's 6 seminars there. You can also go into our ones that we did in March, which was called Invest in 30 Minutes. And there's 15 presentations that you could look at that are about 20, 30 minutes long to learn a little bit about investing. And again, they're not there to solicit people for money, but it's really educational purposes. So if you have students that want to learn more about real estate, go to our website, look at these webinars, their presentation, the PowerPoint presentations, and they're 20, 30 minutes long to learn a little bit about different sectors in the real estate asset classes.
Yeah, that would be tremendous help to all our students here who are looking ways to learn more about your company as well as real estate. Thank you very much. Thank you very much. I can't express how grateful I am to have you here today. It was really a fun time talking with you, and I hope to keep in touch with you again soon in the future.
Well, thank you, Bart, and thank you for your leadership for your students that are interested in this. So good luck with your studies. And
Thank you.
if you decide not to do real estate, you might make an excellent TV reporter.
Oh, no. Thank you. Thank you very much. Have a nice day. I'll see you again.
You stay safe. Bye.
Thank
Bye.
you. Bye-bye.